Hi everyone, Jasper here. Thanks very much for attending. So we're about 10 minutes away from the non-farm payrolls release, so we're going to cover that live. We're going to have a little preamble chat here for 10 minutes or so. We'll cover the data coming out, and then we'll see how the markets are reacting and you know how it's best interpreted in the grander scheme of things. Any questions at any time, certainly feel free to shoot them through to me. If you're watching this as a recording later on, obviously the event will have already taken place, but certainly worthwhile, sort of, I do it myself, is compare you know, your expectations beforehand to what actually happened, and it's all obviously a big learning experience. So this is where we are, non-farm payrolls, March 9th, 2018. This is what we'll be covering today, just the market expectations for the data, the recent trend of the data, what's the story leading into it, and then we'll cover that live reaction and make any conclusions and any Q&A if needed at the end. This is what we're looking at. I've grabbed this from the economic calendar page. We've got the non-farm payrolls headline number, so that's 200,000. Pretty much bang. Some places have got it 205,000, but that's pretty much 200,000 exactly as it was last month. So it's not really a game changer. We've been cruising along that 200,000 mark for a while now, as we'll look on the next page. So the key one really, I think that the market will be reacting to, and I'm not alone in this, is that it will be a reaction to the average hourly earnings number. Obviously, if one of these other numbers has a big dramatic change, maybe that will take priority. The unemployment rate is expected to drop to 4% for the first time in quite a while. So, you know, it's quite impressive actually that still 200,000 jobs are being created each month on average, despite 4% unemployment. But as I was saying, it's really this average hourly earnings number, because I'm sure you'll remember that it was a couple of months ago that the wage data increased more than expected, triggered some worries about inflation, and that was the beginning of the 10%, well, 12% correction we had in most of the big stock markets, and it's that volatility has stayed with us since. So could be an important report. This is the headline, how the headline data has changed over time. So as you can see over here, we're expecting 200,000 this time. You can see that while the actual numbers have kind of gyrated a fair bit, you can see that the expectation has pretty much been 200,000 for the best part of 5 years. It's been very consistent in terms of what the market's been expecting, and the actual delivery has been obviously up and down, but actually probably average-wise, it's not far off that 200,000. So no big game changer really here. It could even pop up towards 3,000. It could pop down to also 150,000. It's probably not going to change the long-run theme. So as I mentioned, this is the big one, the wage data. This is when it popped up, obviously, a couple of months ago. Caught everyone off guard a little bit. Now we're back moderating down into this kind of 0.2 to 0.3% range, which, as you can see, it's literally every month. So we expect this 0.2%. You know, and a bit more recently, you can see over the last 3 years or so, there's been a few predictions that it rises a little bit quickly, but nothing, you know, there's not been a single month where the consensus has been 0.4%. So that's kind of what we're looking for, is actually a kind of, you know, we've moved up a gear slightly to 0.3. Are we going to move up a gear to 0.4, 0.5 as some of these government stimulus measures kick in? So as I mentioned, the market's nosedived over this wage data a couple of months ago, so that makes it extra interesting. The idea is that we're waiting, like, there's a global synchronized economic growth right now, and we're just waiting to see if that actually moves into inflation. And obviously, if there is going to be higher inflation, then central banks need to pull back from QE, and the Fed needs to raise rates a bit quicker, and that has its implications for the dollar and for stock markets. There has been more volatility since the correction, so that's all good when it comes to trading the data. I've mentioned on a few occasions where these NFP reactions have been pretty sluggish, 30-odd pip reactions for the last few months. Hopefully we're out of that now. We start seeing some sort of 100 plus pip moves and make this a good trading opportunity again. There is, we'll look at the euro-dollar chart. I think where this is the most apparent, it's obviously the euro-dollar chart, pretty much a mirror image of the dollar index chart. And there are some signs that the dollar's bottoming out a bit here. So we'll see how that sentiment plays into things. And also just today especially, it's been very busy. Even this week in general, been very busy because markets got lots of things to focus on. So these steel and aluminium tariffs from the US, put out there by Trump in the last week or so, signed off yesterday, and obviously now we've got the news that Trump is going to meet Kim Jong-un. So geopolitical risk. Not that markets really reacted to it a lot this year, but maybe they would have reacted to it more in 2018 with this higher volatility. But it's not going to. It doesn't look like it's going to be one of those factors that affects markets now. If in fact North Korea is on the road to denuclearizing, that's a big threat off the table for the world and for markets. So let's have a look at good old LCG Trader platform. I always get that wrong. Let's have a look here. Okay. Let's see if I can full screen this. So let's start with the euro. Okay, so here's the context on this for me from the daily chart, is that we're within this range. I've got this level here down here, 122. There was that low there. We took it out. We closed below it, but then we had this big daily bullish engulfing candlestick, and that triggered this big rally up to here. I thought maybe 123.50 might cap it again. I was looking for either big reversals from 123.50 down or opportunities for 123.50 to the top side. As it is, we pushed quite a fair bit beyond there. We pushed up into what was basically, depending on where you take the high from, but say if you take this as the initial high and this is just a false breakout, actually we banged perfectly off the 76.4% fib, and we've had a big bearish engulfing candlestick here. So for me, in the short term, this bearish engulfing candlestick makes sentiment generally geared towards sell setups. So if we go, so then as I still view this 123.50 as a kind of important kind of pivot point, if we get a rally up to 123.50, I'll be looking for some reversal patterns there to send us lower again. If we get up through there comfortably, then I'll probably have to dismiss that kind of bearish sense. But theoretically, while we're in the range of that bearish engulfing candlestick, things like still look like kind of skewed towards the downside. But the reasons to be a little bit concerned about this bearish setup is that we are, generally speaking, in a kind of bullish trend, and on the longer term, and in the medium term, we're in a bit of a kind of sideways chop, so these signals aren't going to be quite as reliable. I just like the fact that it's come off that fib quite nicely, and it was a very strong pattern. At the moment, the euro's rolling over again, so if we go down to the shorter term chart, you can see it's been a very unusually bearish setup in euro dollar leading into non-farms, and you can see as of the moment we had a little consolidation into the data, and we were breaking out down below. So I better be savvy here to the fact that the data is going to be coming out soon. So let me bring this window on here just so we can be ready for it as soon as it happens. But we are looking like a little breakdown here. Should the data be soft for the dollar, let's look for 123.50. If it's positive dollar, we're probably not going to get there. We're just going to get an extension. So we're at 130. Okay, here we go. 313, well, that's very positive for the dollar. 313k versus 200k expected. How are the wages doing? Average 0.15. Oh, it's very soft on the wages. It's mixed. It's a mixed report. Over the year down to 2.6%. Okay, so this is being interpreted as dollar positive. I think that is quite a big surprise on the headline number. Goes against everything I was saying against the wages. We'll have to see if this downside break continues. We did say we had a kind of bearish thought pattern going into this, so it makes sense to push to the downside. But obviously that average hourly earnings data does sort of weigh on this a little bit. The Jan payrolls were revised up to 239. December also revised up to 100. So we had some higher revisions as well. That's a positive for the dollar. And the unemployment rate 4.1, so that's interesting. So that's another kind of slightly more bearish point for the dollar, because as I mentioned, we're expecting that drop down to 4%. So that's the January rate. But here you can say the February rate was 4.1 versus the consensus was 4. Average hourly work week, no big change there. Yeah, so Feb hourly, yeah, that's definitely disappointing on the wages. We're struggling to make some real bullish headway here. Let's see what the other markets are doing. We never really got a chance to talk about the dollar. Dollar pushing nice positively here. We had a bullish setup that I wanted to talk to you guys about. I'm going to have to start these webinars a bit earlier, I think, because we had what's often referred to as a Pinocchio setup here, a pin bar, where we had an eye, a nose. If I zoom in on this a bit, make it a bit clearer. We had the first left eye, the nose, the right eye. This right eye never dipped below the first eye. Then we got a push to the top side of the third bar, then of the first bar. So we've had a nice bullish breakout here, and it coincided with a double bottom here down near the 105 level. So dollar yen pushing to the top side. Looks like markets taking this quite positively, because that was a big surprise on the headline number. Some disappointment on wages though, and some disappointment on the unemployment rate slightly. How's gold doing? Well, unsurprisingly, given that the euro is rolling over, gold is rolling over for now. I'm just wondering how sustainable this downside move is going to be, because we had such a big drop already in the euro especially. You can see we're struggling a bit. I mean, the headline data is good, but I wouldn't be surprised if we get a reversal here and snap up, and then we can see what happens at 123.50. Anyway, gold I was actually going to say that even though I generally like it as a market to react to NFP, it's generally one of the bigger movers, it's just in a very choppy condition at the moment. Overall trend is bullish. Looks like we're consolidating before a breakout of this longer term kind of wedge triangle type pattern. I'm just waiting for when we can get some solid breakout to the top side through 1350, but we're not quite getting it yet. 1307 was that peak back in January of 2015. There's been a bit of a pivot on a few occasions since, and that's holding us from more downsides. If we do get a break below there, that could be an opportunity, but anything inside that 1350 to 1307 area, to be honest, is a bit of a chop, and not really something I look at trading. Let's look at stock markets though. So this was another example of the Pinocchio setup, where this is the daily chart, and you can see here again the left eye, nose, right eye. This was the kind of line in the sand, if you like. If you get a move through today's candle through this little line, let me pull you down to the 4-hour chart just to show you. This is the line here, and you can see we tried to stab down through it a few times. It held up, little bullish engulfing candlestick pattern to break us out. Eventually, after a false break, we then got the legit break. Then we pulled back to the top of the line here, wherever you want to draw it, and now we're breaking out to the top side. So this all looks good. We're just running into some resistance now, but I would say based on this daily setup, that actually maybe this has a bit more room to run. We're probably going to break this 25-30 environment, because remember that this data, pretty good headline number, wages not so good, but I think probably given the fact that we've got reduced geopolitical tensions, and that actually Mexico and Canada got some exemptions on the tariffs, that actually maybe stock market to look into to push a bit higher here. So, but this will be important. This basically was 25.40, but obviously 25,000 is the big number we want to close above. I think if we hold above there for a few hours, then the market looks good for another push to the top side. Hard to tell because we're in a pretty choppy environment, but for me this looks like quite a nice setup, and also quite good that it reflects what's going on in dollar yen as well. So stock markets are obviously a risk-on venue, and the yen is a risk off, so that makes dollar yen a risk on scenario. So if dollar yen and stock markets are doing the same thing, then it's kind of confirmation of that slight bullish bias we seem to be getting. Let's have a look at how the euro's doing. Well, we're getting that reversal I was chatting about. There's the this is on the 1 hour chart. Potential false breakout. Maybe this will be an opportunity though. In a way I wanted this, because if we do get up to 123.50 and see a reversal from there, we're able to jump in on an extension of this down leg with with a better price. Obviously the risk there is that actually this down leg was just a short-lived thing and we're moving further to the top side. But I'll certainly be watching that 23.50. Maybe in the middle of a range you wouldn't put any blind orders in there, but 123.50 up to 124, inside this bearish engulfing candlestick on the daily chart could be interesting. Let's see how things develop. I'm not seeing, to be honest, I haven't got the questions panel open, but I'm not seeing any questions here today. So I think let's just wind things up there. I think we've got a pretty good understanding what's going on with this. Thank you very much for watching, everyone. Good luck for trading for the rest of the day. There we go. Thank you again for attending, and make sure to follow me on one of these handles here just for the latest updates. I'll be sending some charts through and the latest news as I feel appropriate. Thanks again, guys. Good luck with trading for the rest of the day, and don't forget to tune in on for Monday's webinar. Cheers, Jasper signing out.